Quebec Premier Francois Legault says his government will introduce new legislation aimed at speeding up environmental approvals for major projects. Speaking on a talk show Sunday night, Legault said that the bill, known internally as Q5, will mirror the federal government's own fast-track legislation, Bill C5. The premier argued that major projects need to move forward more quickly to create jobs, saying it simply shouldn't take years to get environmental approval. And while one of his former cabinet ministers publicly criticized the idea last week, Legault says that he still has the backing of most of his caucus. And last week brought some surprising moves in the world of finance. The Bank of Canada lowered interest rates for the first time since March, signaling a shift in their approach to supporting the economy. At the same time, the U.S. Federal Reserve also caught many off guard by cutting rates, even though their economy is still showing strong growth. And while central banks made headlines, the cryptocurrency market experienced a major shakeup, with $1.5 billion in bullish bets wiped out in a sudden crash. It left a lot of investors wondering what's ahead for digital currencies. To help us break down all of this and what it means for the markets and everyday Canadians, I'm now joined by Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, thank you so much for being here today.
Well, thank you, Theresa. That was an interesting lead story about Quebec wanting to become maître chez nous, masters in their own house. Hopefully that they're able to work with the rest of Canada as we try and build this country into what it could potentially be. To borrow from one of the fathers of the American Revolution, if we do not hang together, we shall all surely hang separately.
Now, Brendan, let's start with your outlook on the market.
My outlook is actually quite positive. I have it, it was been an interesting beginning of the year, of course, with the tariff kerfuffle, which is still going on. I mean, nothing, literally nothing in this entire world has actually been resolved, let alone the tariffs themselves, or whether the United States, the way they've been done, can actually impose these tariffs. The president, his tariffs are going, and the legality of them are going up to the Supreme Court. So nothing has actually got resolved, and yet so much of our attention here in Canada has been based on, like the analogy that Trudeau one used many years ago about a mouse living next to an elephant. I mean, we have to watch the elephant very closely, but it doesn't help the mouse get any bigger or better or stronger or more prosperous. So I think the mouse needs to actually consider our own affairs to a much greater degree. So while encouraging, at least in spirit, that we in Canada are taking seriously development projects, I don't think that's the full answer, but I do think that the markets, both here and south of the border, should continue to do well, even though the markets and the economy are different. So people can talk about unemployment and different things, and the markets still do well. So I actually am quite bullish going forward.
Now, last week, the Bank of Canada lowered interest rates to 2.5%. And as I mentioned, that was the first cut since March. Will this be helpful to Canadians, or is this just Canadians looking for some sort of positive news?
Well, I think it'll be generally taken as positive. I mean, for a bunch of reasons. There are a whole lot of mortgages that will be coming due that were written in 2020, 2021, 2022, before the interest rates started going up in earnest. So to the extent that when those mortgages come due, the rates might be a little lower, that's going to be helpful. They're still quite a bit higher than they were 5 years ago, but at least they'll probably be done at a little bit lower rates. Canadian mortgages are generally shorter term. They're either floating rate, or if they're fixed rate generally 5 years and under. So lower short-term rates, that's going to be helpful. Probably be helpful to the markets, though I think one could argue that there is not an independent Canadian capital market at this point. It's actually quite stunning how few new companies actually become listed through the initial public offering process here in Canada. But it should be helpful to markets, because as they cut rates, some of that goes to Main Street, some of that goes into housing, some of that goes into businesses. They're making it easier to borrow for all of those things. But most immediately, it goes into investment assets, and the most liquid, the better. So it means that money will likely flow into the stock market that would have otherwise been uh, either not borrowed because interest rates were too high, or tied up in paying interest rate in tied up in paying interest payments.
Now, I know you mentioned that the mouse needs to stop paying attention to the elephant, but let's pay attention to the elephant for a second. The United States also followed suit and lowered their interest rates by 0.25 basis points. Why did they drop their interest rates when their economy is supposed to be booming?
Well, it's just Canada is a massive trendsetter. Everybody looks to what Canada's doing, and whatever we're doing must be right. I'm sure that's the answer. Um, or, or possibly that the chairman of the U.S. Federal Reserve, Mr. Powell, probably just couldn't take it any longer from the White House, where the pressure has been unrelenting and intense to the point of uh, firing Fed governors, Federal Reserve governors, on the face of it, to me, seems relatively spurious reasons, especially given the irony of the one doing the firing. So I think probably they lowered interest rates at the Federal Reserve in the United States because of political pressure and to try and take a little bit of that pressure off. I think you're right, Theresa. I don't know that it's going to be something that's particularly helpful to an economy that's near full employment anyway. And as I said, I mean, if it's true in Canada, it's orders of magnitude more true in the United States that money that comes about by making it easier to borrow may go into houses, may go into the real economy. It may help some Canadian companies like Real Matters. They said mortgage rates in the U.S. come down. Real Matters does extraordinarily well when U.S. mortgage rates come down because of all the refinancings that are done there, because they're in the appraisal and title and closing business. So there are ways to play lower interest rates in the United States, but really most of that money that becomes freed up goes into the market. So if nothing else, I think markets will continue to do well as long as the central banks here and south of the border are cutting rates. And it is to be expected, I think, that the Fed is going to make at least, well, probably two more quarter point cuts between now and the end of the year.
Now, cryptocurrencies were hit as $1.5 billion in bets were wiped out. Why?
Um, well, I mean, crypto has been the go-to store of value. It has usurped, it's taken over the place gold used to have. So if you didn't like government issued currency, so-called fiat currency, currency that's issued by government decree or fiat, if you didn't like those currencies, you could buy gold historically as a way of preserving wealth, because gold is the ancient form of money. And up until I was quite small, but in my lifetime, the US dollar was at least backed by gold. But now it seems that gold has taken a step forward. There was a Canadian money manager who, for years and years and years, he wrote a book called $10,000 Gold. Nick Barishev was his name, who felt gold was going to go to $10,000. And although poor Mr. Barishev never lived to see it, I think that's a distinct possibility, because there is a limited supply of it and an unlimited supply, seemingly, of fiat currencies. Now, it may well be that Bitcoin, Ethereum, and these others have a bit of a resurgence, because it's gold, if nothing else, is really heavy. It's hard to carry it around. What I think will probably come next is some form of stable coin, some form of cryptocurrency, electronic currency that's tied to a government currency that should or is supposed to make financial transactions less expensive, more timely, enabling people to send money at all hours of the day or night without the usual bank fees or restrictions. So I think there will be a resurgence in interest in cryptocurrency. It just may come back in a different form.
Now, Brendan, at the start of this interview, you had mentioned that Canadians need to do a better job at just focusing on Canada. But what advice would you give to young Canadians who are hearing about this trade war and hearing about Bank of Canada lowering the interest rate, raising the interest rate? What advice would you give to not worry about money or to better budget and just focus on what they can control right now?
I would have a little bit of unorthodox advice. Write down, if you're a younger person, everything that you see as your disadvantage, personally, generationally, regionally, if you happen from a difficult area of the country, write down every disadvantage that you have. And then write on the other side of the bit of paper, opposite this advantage, why that is an advantage, how that can be changed into an advantage. I can't, for example, I'm not going to make my fortune in developing the new AI technology. I'm not going to be at the leading edge of crypto. I'm too old. As younger people, you have an advantage at this time of technological revolution to take advantage of that and make something like the world has never seen before. So that's would be my suggestion.
Well, Brendan, as always, thank you so much for the time.
Thank you, Theresa.